Hello, everybody. Welcome back to the podcast. John Abbas here, and I hope all of you are having a fantastic week. I absolutely appreciate you spending a little time with me today as I bring on a fantastic guest who's going to share some of his strategies for growing and multiplying wealth. We'll get into that in just a minute, but before we begin, please hit that subscribe button really quick. If you're new here, or even if you've been here before but you haven't subscribed yet, I just have some great guests lined up, and I want you to get a notification every time I release a new episode. Now, with that being said, today I have the honor of bringing on a gentleman that has a story that I think we can all relate to, and has a path that I think most of us are on. And he's going to share some really great things, but he went from being broke to working a job, from working a job to becoming an entrepreneur, and from being an entrepreneur to being a full-time investor. And I think that is a trajectory that many of us are on, is how to eventually get to a place where our money and our assets are generating income independent of our time. And Chris Larsen is going to talk about that today. He is an author, he's an investor, he's the founder of a rapidly growing coaching company called Next Level Income. What a cool name as well. But he's got an interesting story. Chris spent much of his youth training extensively to become a professional cyclist. And all of that came to a screeching halt when he was really young, when his best friend and his training partner died unexpectedly. After winning a final race to honor his best friend, he left the sport with no direction or focus, just trying to figure out his next move. He was doing things that he hated, but a mentor of his introduced him to investing in the stock market. And after becoming an investor and dabbling in it, he found his path. He became a very successful full-time investor in real estate and in stocks, and his vision is to help as many people as possible do the same thing, get on the other side of that river. So obviously he's living that dream now. And today in this episode, we talk about Chris's story, and then he just shares some really great steps that anyone can take to go from where you are now to becoming a full-time investor with time freedom and the ability to have control over when and where and what you do and where you go. Just a great episode. I'm really excited for you to listen to it. So please sit back and enjoy. Chris, welcome to the podcast. I'm glad to have you on, man. Been looking forward to this interview for some time. So I'm pumped for you to pour into the audience today.
Absolutely, John. It's great to be here. And man, I wish we were doing it in person. I absolutely love Nashville. I was just there about 6 weeks ago with my wife.
Well, as you said before we started, you got COVID here. So hopefully that doesn't deter you from coming back. And if you ever do, we can totally do another podcast, because you have, there's a lot that we could talk about for sure. And for the listeners out there that are listening in, Chris is the founder of Next Level Income, which, I mean, correct me if I'm wrong, but it's kind of a conglomerate of things, right? It's a highly successful real estate company that's diversified. It's the title of your book that we're going to kind of talk about today. It's your coaching company. So it's like a conglomerate of businesses in that name. And so, Chris, I was hoping, if it's okay with you, that we kind of focus this interview on your book and the principles inside of it, because when I was researching you, I've realized that you are really in the perfect place to pour into everyone today. Like you've reached the other side of a trajectory that I think a lot of us are on, how to go from making money to full-time investor, but you're not so far on the other side that you're like out of touch with what it takes to get there in the daily method and all of those things. And I think you're just like, I listened to one of your other interviews and it was just really awesome. And, like many of us, our goal is to go from trading time for money to having a passive income, obviously, to allow us to do the things that we want to do. You've done that, and I want to dissect it. And so I was hoping we could just start with your story, man. Like, how did you get into what you're doing now, and what gave you the motivation to do it?
Yeah, no, absolutely. And what's interesting, I love how you phrase that, John, because you said, you're in this, you've kind of gotten this trajectory, I've kind of reached the other side. I almost named my company Escape Velocity Capital, because I'm like, if you can reach escape velocity, that's right. The dream, right?
That's exactly right.
But real quick, Next Level Income was born as an education platform first and foremost. And that's what the book's about. That's why I wrote the book, was to take my story, to put it in there. And by the way, if you're listening today, you can get a free copy. Just go to nextlevelincome.com, click on the book link. And if you put your address in, I'll even send you a copy. If you're in the continental United States, or even Canadian, my wife's Canadian, I'll send it to Canada as well.
Australia, it would not be worth it.
Sorry. Yeah, you can't. I'm not set up for free international shipping yet, but I will. But you can download a free ebook. So there you go. And again, I kind of go through a lot of my story in there, John. Yep. But really, when I go back, like most people, in college, we have these formative experiences, and for me, we were talking before the show. I raced bicycles for more than 20 years, and I went to school. I went to Virginia Tech for engineering. But really, I went there to race my bike, and I wanted to be a professional cyclist. That was my dream. That's what I wanted to do. I was very fortunate. I had a little bit of talent, a lot of work ethic, a lot of discipline, which I've always said has been that's like my superpower. If I have one, is I just have that tenacity. Yeah. And I got to college. I raced for a year. And in between my freshman and sophomore years, my best friend, my training partner, and my college roommate passed away. And that it had an impact that took a little while to set in. The next year, I got on my bike mostly for therapy. I'd ride hard. I was upset. I put a lot of emotion into it. And I found out, like, over the years, a lot of my success came from that emotion. Like I would be able to really get fired up for an event, or if I had people there to support me. And after racing for another year, I was an All-American athlete. I was state champion. I got to train with Lance Armstrong. That was also kind of a dark period in the sport with drugs and everything. Yeah. So between the depression of losing my friend and people coming back and telling me that the sport wasn't everything that I thought it was, at the end of that year, I quit cycling. But I quit racing because I realized I crossed the line. I'd won this race. It was my friend's memorial race, my friend Chris's memorial race, second year in a row. And I was in such great shape. Somebody threw tacks on the road. I got a flat tire. I got spit out the back of the group. I changed my wheel. I came back. I rode right through the group all the way, right away from everybody, and won. I was in great shape. And you would think, like, I'm in great shape at the peak of my cycling form. I win, for my friend. And I felt nothing. I literally felt nothing. And the next week was the state championships. I got off my bike in the feed zone where they hand out bottles and food. My mother was there, and she's like, "What are you doing?" And I was like, I'm done. She didn't know I was telling her I'm done with the sport. I said, I'm done. And she's like, I've never seen you quit a race before. And that was the last time I raced for a long time. I started racing when I was older again. But my point in all that is, when I got back to school, I was like a ship floating in the middle of the ocean. Yep. I didn't want to be an engineer. I really didn't want to be in college at that point. I just didn't have a lot of friends or social network because I was racing my bike. Those were my friends. Now I'm not racing my bike. I don't want to be an engineer. I can't relate to a lot of these people. I'm not smart enough to be an engineer. So I'm like in class. And what I realized was I was very fortunate to be able to get up every day and have the opportunity to live a life. And I'll never forget, one day I just said to myself, you know what? I'm not going to have any more regrets. I'm going to live life without regret. I'm going to get up every day. I'm going to make the most out of the day. And I want to make the most out of my life. And I knew from racing, you didn't make a lot of money racing bicycles. Yeah. So I was always entrepreneurial. I know, John, you guys are like super entrepreneurs, you and your wife. And I had a loft. I sold lofts. I sold supplements. I sold Cutco. I always had these like little businesses and ventures to make some side income. Right. I see you laughing.
Dude, our story, when I'm going to let you finish, but when I tell you how similar you're going to like laugh in just a minute, but keep going. I'll tell you in a minute.
All right. So, I had these little entrepreneurial endeavors because I knew you needed money to be able to be free and go do what you wanted. I didn't want to have to race my bike. And it's like, I wanted to eat a nice meal, or maybe I wanted to have a hotel instead of sleep on somebody's floor. And I slept on a lot of floors, hitched a lot of rides. and I realized I need to have money to live my life on my own terms. And I was introduced to investing by the same person who introduced me to cycling. His name's Clint Provenza. And I just started getting into the stock market. I started day trading. I was making like $5,000 a month in college as a junior. But I was also not, like, some nights I'm laying there in bed and I would take that's when you could buy, I forget what it was, like over the counter, ephedrine maybe.
Yeah.
Like, I'd get up after not sleeping. I'd pop an ephedrine and go like work out. I'm like, my heart rate feels like it's 150. This can't be good.
Yeah,
so
it's Adderall today, but
it's absolutely terrible. And I was like, I just remember in one of these mornings, I'm like, what the hell am I doing? I thought there's got to be a better way to make money, quote unquote, investing, because day trading is not investing. And I bought my first property at 21 after doing a bunch of research. And I realized that the ability to leverage, control the cost, your basis going into a property, renting out 2 of my bedrooms to 2 of my friends and living in the third, buying the house next door and renting those 3 bedrooms and having a little mini multifamily, basically 6-unit, when I was 22 years old, really, it taught me a ton of value in that. And that was really kind of the start of my investment career that was all driven by that desire to live life on my own terms and honor my friend's life that he didn't have anymore.
Man, that's awesome. And when I say our stories are similar, like out of high school, I grew up in a super poor family. So I joined the Navy and I was in engineering. I tested high on the ASVAB. So I went into nuclear engineering and it was a 6-year commitment and hated every minute of it. Like, was dumbest guy in the room because I love people. Like, I love sales and I love, like, just engineering. I was not built for it, but I muscled through it. My ex-wife was Canadian. And when I lost my, maybe we don't have that similar. But when I lost my first business, was a restaurant, started the recession, I ended up getting into direct sales and, went to the top of a company. So we've had kind of similar paths trying to figure out, like, where do you go? What do you do? So it's just kind of crazy, man. Like, really, really cool story. So your
Thank
book,
you for sharing that.
Yeah, of course. So when did you write Next Level Income? Because obviously you bought your first property. Like, did you just stick with investing after that? I want to actually finish your story.
Yeah, absolutely.
Scale that
I kind
up,
of took a little hiatus there.
Okay.
And that's a great point. So I bought that first property and I was reading at least a book a week. So, I read, like, I counted them. It was like over 250 books during those, years as I finished school. And then I did grad school as well. So I was just, I took a speed reading course, and then I was just like, I just would absolutely always be reading, listening to a book. And I read this book. It was called, I think, Buy and Hold. And it was really simple. And it was just kind of like, if you buy properties, you pay them off, I was like, man, that's so simple. It's just, I like something that has a very high degree of success, right? So I'm like, all right, if I'm going to put time and effort into this, because my thought is a lot of people, this is what, maybe I'm counterintuitive, or maybe I'm just not as smart as people think I am because I have an engineering degree, John. But when people say you should take a bunch of risk when you're younger, I disagree with that. I think you should not take as much risk when you're younger. And here's my thought on that. If you do something that has a very high degree of security when it comes to finances, right? So if I say, hey, John, if you do this for 10 years, you'll never have to work again. Okay. But then after 10 years, you can do whatever you want. By the time you're 30, you can take all the risk that you want. And I think a lot of people are told, take a lot of risk when you're young, invest in crazy stuff, or, go do something like, go work, you tell kids, oh, go do what you're passionate about. Don't worry about making money. Well, what if you worried about making money for 10 years, maintained a hobby, on the side, and then after 10 years, because we teach you the proper financial skills and how to invest and make these decisions, then you do what you want and live your best life for the rest of your life, which hopefully is very long. Instead, we get stuck in this trap where we take these risks, we chase our passions. We find out that some of these are very hollow because, these are like racing a bike. I'm like, what am I doing? There's a lot more. There's a lot more to life. And then what happens? We're in our 40s. We pop our head up. We're like, we have this money. We have this quote unquote success. I'm a VP at this company. I'm divorced. My kids don't know me. I'm in this hotel, sitting at this bar, talking to this person that I really don't like, that I have to work with, and I'm not happy. So then you end up in another relationship, or you buy a car, or and then we repeat the cycle all over again, and we're trying to figure out what's going on. And I think if we taught people earlier on to say, hey, look, build a base of security, and then you can build off of that. So that's what my plan was. I said, if I can just buy enough properties and I can have enough income coming in after expenses, and let me clarify that, enough income coming in after expenses, but before I pay the mortgages off, of $10,000. So I was like, net profit of $10,000 before I pay mortgages. I said, all I have to do is pay those properties off, and I'm done. I'm free. So I bought enough properties, had 10 grand coming in after expenses. It was actually a little bit more than that. You have to pay in management fees, reserves, all that. And I was like, okay, now I just got to get a job, sales job, make some money, pay these properties off. And then I went and stuck my head down for about 10 years. And when I popped my head up, I realized that, yeah, that was a decent plan, but there was actually better ways to do what I did. And that's when I realized that managing those properties, letting the equity grow, not refinancing, not leveraging, just focusing on single family properties. It was a lot of headaches. It wasn't a ton of return. And if I took that equity and I moved it into multifamily, the holy grail of real estate, as I call it in my book, something with better returns, better scalability, better tax benefits, now we could really set, some extra fuel on that fire and really grow money. So,
wow. Man, there's a lot to unpack with what you just said. The first thing that I want to point out is, man, I really, really like your unique perspective on that when you're young. And, I have 3 daughters. I think a lot of the listeners here have kids. And how powerful is that, right? Like it's completely, it turns an old school philosophy like completely on its head, because that's what parents teach their kids. Try everything, experience the world. But if you really understand how to manage an asset at the age of 18, and you can just skip, literally duplicate, or just focus on something, because right now, like, there's young people getting into things and they're just making a killing because there's so much, like, it's so easy to build an audience on YouTube or anything. Like, you see these young people and they're mastering whatever crypto, and then they're charging for it, and they're making all this money at a young, but it, like, just to learn that skill at the age of 18 to 25 to 30, and then do whatever you want. I mean, that's really powerful. And the second thing I wanted to point out is just going back with what because you said you would have done things a little bit differently. Like, can you talk a little bit about that? Let's say you could go back. What are some of those things? You bought that first property, you got to $10,000 a month. Would you have still gotten a sales job? Like, what would you be doing knowing what you know now?
Yeah. So I do question that. And I oftentimes say, I wouldn't go back and change anything. I think, we have our paths for a reason. And I always, I'm grateful for the lessons I learned along the way. Let's assume I'd stick with my med device career, because I met a ton of wonderful people. I got to work with amazing technologies, amazing, just geniuses. I got to work with orthopedic spine surgeons, brain surgeons. I mean, these are geniuses, just really smart people that are helping people out, really neat technologies. And I learned a lot of skills. But here's what I would have done differently. I think, this is the other thing. We're reluctant a lot of times to pay for advice. We're reluctant to do things. If we go back and we look at the way things used to be done, we had apprenticeships, right? You want to learn something, you go apprentice with somebody. And I had Ray Alcorn. He wrote, like, someone called the Bible on commercial real estate, right? Yep. He lived right down the road from me, just outside of Blacksburg. And I called Ray up, or emailed Ray one time, and I was like, hey, Ray, can I have a conversation with you? I was like 20, maybe 23 at the most. Okay. Yeah. Sit down with Ray, and he's sitting there in this little dingy shack, which now it's this massive, like, shopping center he sold to develop. And I'm just like looking at this place, and he goes, you need to learn how to manage, properties, Chris. Like, that's what you need to go do. And I'm like, what does this guy know? Like, he's got a shitty little office, and little did I know he was on this, like, empire, right, of real estate. And what I would have done is I would have, now knowing what I know, I tell young people, I say, look, if you want to build, like, a literal real estate empire, you need one of 3 things. You need one of 3 skills. You need to be able to find great deals. You need to be able to run great deals, or you need to be able to fund great deals. So you either have to have the money, the ability to manage and make the property better, or have that source of deals, right? And you could even say that source of deals includes being, having the ability to underwrite a deal, right? And understand, is it a good deal? So I would have found someone and said, okay, John, help me buy my first apartment, learn how to run it. I would have kept working, kept doing what I was doing, but I would have switched from residential to commercial. And that's really what I wrote, Next Level Income. You asked me about that. I can stop here, but that's what really inspired me to write the book, was the lessons that I learned along the way.
And I want to pivot into that book for just a little bit. I don't want to spoil the book because, man, you graciously offered for people to be able to get it for free, which anybody that's listening would be crazy not to just take advantage of that. But so in your book, you spend some time talking about the holy grail of real estate investing. Can you just talk a little bit about the principles of that book, what the holy grail is and what you discovered?
Yeah. And look, this book was written, I started writing this book a few years back, and multifamily is on fire right now. Right. And it's not the only space in commercial real estate. We do a lot more stuff, but here's what I found. So, when I wrote the book, I said, how to make, keep, and grow your money using the holy grail of real estate to achieve financial independence. And when I looked at multifamily real estate, it had the best risk-adjusted returns out of any sector out there in real estate. So Ray Dalio, who a lot of people, if you know who Ray Dalio is, who Warren Buffett is, a lot of people say Ray Dalio is the most successful investor in this past century. He's performed exceptionally well with Bridgewater Capital. He calls the ability to have an increased return in your portfolio and decrease risk the holy grail of investing. And I read that, I'm like, that's multifamily. That's this is the holy grail of real estate. And this, and I love a lot of the stuff that Ray writes with principles and kind of how he's kind of built his business on things more than just making money. He talks about people. But I said, okay, so there's a methodology there. First off, if you're out there and you're starting off, figure out a way to make money. You need capital, right? You need capital to grow. So go out and make money, figure out how to keep more of your money, have a proper tax strategy, have proper insurances. And I walk through all this in the book. I even rewrote it when I wrote the hard copy, when I published it, with a third chapter talking about your opportunity fund and how to use cash value life insurance to really grow your capital stack so you can go take advantage of these opportunities. Right. But then 3, how to grow your money. And that's where real estate comes in. I'm a huge fan of real estate when it comes to growing your money. Multifamily, it has this unique aspect where it's always in demand. You have people that always need a place to live. You have affordable housing, you have workforce housing, you have, properties that are, built in the 80s and 90s. You have brand new luxury properties that people are paying thousands of dollars a month to live in. You have all these different segments that are out there. And no matter where you are on the spectrum, you can pick and choose where those are based upon your strategy, and also based upon, your market to determine what's right. But here's the difference. Commercial versus residential. So some would say, well, Chris, housing's the same. Yeah, but let's say you buy a house for $500,000, you put 20% down. That house, it appreciates in value $100,000. Now you have $300,000, right? You have $200,000, right? So you've doubled your money.
Yep.
Terrific. Now you have $200,000 of equity. Let's say that house goes up to $1 million, right? Now you have $600,000 of equity in that property. Okay. It goes up $60,000. That used to be a 60% return on your money. Now it's only a 10% return on your money. So as the property gets more expensive, your returns go down over time and you're building that equity over time. The thing is, you're still managing the same house and you're getting lower returns. And anybody that manages, I know a lot of people manage dozens of houses, even over 100. They say, they're like, when can I get rid of these houses? It's just a bigger and bigger headache. Right. You can manage a 10-unit apartment complex, 100-unit, 1,000 units, and have one person handle those management capabilities in a very scalable fashion, very scalable. Also, you can control the value. So we call it forced appreciation. In commercial properties, like if I go fix my house up, I put, new flooring and paint and these sorts of things. It might be worth a little bit. It might just have more curb appeal, as we say. But everybody knows the story. It's like, oh, you can do this to your house, but it's not actually going to add value to your house, right?
Yep.
So, and that's great. Homes, it's a place where you raise a family, you have an emotional tie to it. But I like to have control over the value of the things that I invest in. So if I invest in an apartment complex and I make it more rentable, and I'm able to raise rents, I'm able to have more efficient operations, maybe I have multiple properties in one market, my costs go down, I have more efficiency, my net margins go up. John, you're a business owner, you get this. These properties are valued just like a business on NOI. And that is when the light bulb went off. And I'm like, you're kidding me. I can control the appreciation. I have less management headaches. Oh, and by the way, I get better tax benefits.
Yeah.
I was like, all right, somebody tell me what's better than this in a market that is supported by just tremendous demographic trends. And I was saying this 10 years ago. And so the book's been out for a couple of years, but the same trends that were there 2 years ago are there today in force.
That's crazy. I want to ask a question because I heard Grant Cardone talk about this and it really had my wheels turning. On top of everything that you said, he had this whole rant on just where the world is heading and how millennials don't want to live like baby boomers. They're having less kids. Most first world countries are having less and less kids. They want to travel more. They don't want 5-6 bedroom homes. And so, this is why he buys apartments. This is why he buys multifamily, because not only tax benefits, not only do you have all these things, but you're preparing for the next generation wave of people who don't want to be tied down by this big home when they're not starting big families. And like, what's your take on that? Do you agree with that?
I can't disagree with that at all. And so Grant, Grant's a believer in multifamily. Hey, he's a former sales guy that invests in real estate,
That's
John, right? We got to
right.
love that. But I say this in my book, you know what the fastest growing segment of renters is? It's baby boomers. Isn't that crazy? So
I did not know that. That's crazy.
So think about this. We now have baby boomers that are downsizing. They're competing for the same properties, the same housing that millennials and Gen Z are competing for. So you have these forces, yet we're still, I think the last stat I read, and again, like if you want to quote me or tell me I'm wrong, that's fine. Just send me, say, hey, Chris, this number was off. But I believe what I read yesterday was we have 7 million housing units coming online, but we need 12 million. It was something like that. We're not even like, we're barely half of where we need to be. So you have this tremendous pent up demand. You have over a decade of underbuilding housing, both apartments and residential. Okay, that's why residential is on fire now as well.
Yep.
You have baby boomers that are downsizing. This is also part of the reason I love self-storage, because you have baby boomers downsizing. You have people moving around. They like to put stuff in storage. They leave stuff in storage. That's a great kind of adjunct to multifamily. You have millennials. They don't have families that are as big. Maybe they're moving around. Maybe they're like, hey, I was just watching a video by the founder of Airbnb. They have people that just live in Airbnbs now. I mean, it's wild.
It's exactly right.
Things have changed. And then I read something in the past week as well. They did a survey on Gen Z. Now, what's crazy, John, is I've had probably a dozen 23-year-olds reach out to me in the past year. Like just specific, like I don't have a lot of people that are like younger than 30 reach out on a regular basis. And if they kind of, like, okay, every now and then every time I have this young, I'm like, how old are you? 23. Huh. Yep. How old are you? 23, 23, 23. I'm like, what's up with these 23-year-olds? And I actually said to Hannah, who was on the podcast, Hannah Williams, you guys should check her out. She wrote a book on Gen Z. And I said, Hannah, what's up with these 23-year-olds? And she goes, oh, we're the tip of Gen Z. And I'm like, Gen Z? And she's like, yeah, we're right behind the millennials. So she starts telling me all about it. She's like, yeah, I'm actually writing a book. I'm a consultant. I'm like, really? We got connected to the real estate world. I'm like, you got to come on my show and talk about this. And here's the deal. Gen Z, only like a third want to own a house. So will that change when they're 35? Probably. But Look, what did we just talk about? Millennials, they're less likely to own a home than previous generations. Baby boomers, they're renting in bigger numbers. They're growing faster than any other generation. Gen Z, is like 50% of their dream of other generations of owning a house. And then we have a tremendous stream of immigrants still coming into this country. And,
That's right.
it doesn't have to be political. The fact of the matter is we still have a lot of immigrants that want to live in this country. Immigrants rent like 2/3 to 3/4 of the time compared to Americans who own in disproportionately higher numbers than that. So we have all of these demographics, not enough housing. I mean, you tell me what's a bigger tailwind, right? Like these are all really great trends that can benefit you as an investor if you're looking for an area to invest.
Absolutely. And plus, I mean, the reason I think people bought homes is because they had to be at a job. And when you have to go to a certain place every single day, you need to live, things like living close to that job are really important. You're going to be there for 20 years. But now, more people are working online, which means they can work from home, which means a change of scenery is awesome. You want to live in this place for a little bit, move here. And so you're absolutely right. And so and I know we don't have a lot of time. I want to pivot and ask just a couple more questions because I want everybody to get your book. You have an awesome podcast. People can literally learn by just listening to your show. You have a badass blog. I read a couple of them before this interview. I think people should check out your blog. I was listening before we got on. The title just caught me. It was just like how to buy 1,000 homes with no money from the bank. I was like, well, I have to listen to this.
Mitch is crazy. You got to listen to that.
He's super cool. And I'm like, I go to this guy's house with a bat and I beat the hell out of his air conditioner. And I mean, just what a great interview. I love it. Really liked it. Really liked it. Yeah. So, but I want to ask, because here's the issue that I see a lot of my personal friends facing is they want to invest. They know real estate is the way to go for all of these reasons, from tax advantages, but their mindset is limited to banks, debt to income ratio. And so in their mind, like, I have to buy a property, create a track record, and then in 3 years, I'll buy another one, even if it's a multi. So like, how do you escape that? Like, how do you get out of that? What's the mindset? What are the things that you do that to scale that faster?
Yeah. So first off, if you're listening to John's show, like, that's a great first step, because you're hearing perspectives that tell you, like you just said with Mitch Stevens, like, there are ways to go out and do it. I think the worst thing you can do if you're an early investor in real estate is go buy a single family house right out of the gate, put all your money into one. I do. That's what I did. And I'm telling you, that's not the best way to do it. So here's what I tell young investors. Well, first off, go talk to a lot of people, get different perspectives, kind of stress test that and say, wait, is there another way to do this? I love Airbnbs. If you listen to Kyle Stanley's podcast, I think it was episode 50, if I recall correctly, he talks about all these different strategies. Did you know you can go and rent a house and then turn around and Airbnb it without buying the house? And you'd be like, is that even possible? Listen to his podcast. Yes, it is possible. If you're a young investor, you can go and buy a house and fix it up. You could do a house hack, but if you go and buy a property, make sure your first property isn't your primary residence. It is an income producing property for you. Right. Figure out a way to do that. So first off, get your mindset different. Look for different ways. Buy an asset, as Rich Dad says, Robert Kiyosaki, don't buy a liability. And then if you're out there and you listen to some of my earlier advice, which is go make a lot of money, figure out something where you can make a lot of money. If you can help a lot of people, get really good at a skill, help a lot of people, go make a lot of money. If you love what you do and you're out there making hundreds of thousands of dollars a year, go find a partner that you can invest with, or find an operator. Like, that's what we specialize in. We like to help people that don't have the time. They love to do what they're doing. I work with a lot of doctors and surgeons, and they're like, Chris, I love what I do. I don't want to quit my job, but I also don't want to worry if the hospital jerks me around with my contract, or, I have a friend and he's like, hey, he's a doctor. He's like, when can we ride? When can we ride? I'm like, dude, do you ever work? He works part-time. He works half-time now because of his real estate investments. So, again, change your mindset. Look at ways to buy your first asset if you're looking to get into real estate, and then find a partner. And I would say that even if you're getting started and you have, you're starting on smaller properties, or if, like I said, you're a high income professional, find a partner that you can work with, that you trust, that can find deals and you can work with.
That was going to be my next question is, what if you want, like, knowing what you know now, if you wanted to be a completely passive real estate investor, but make the best ROI, like what would you do? So you're saying find a partner and have them
Yes.
find the deals. You're the money. And it's so genius. Cause like, so here in Nashville, there's all the hotels are owned by Indian families. And I got to know a lot of the Patels here, became really great friends with them. And it's, man, their mindset, the wealth they have. And it's like the story you were telling earlier with, Ray Alcorn is like, in this little office, but owns like the same way they have these rundown stores, gas stations, but they live in these like 12,000 square foot mansions. It's like, it's insane, but they do the exact same thing. They'll bring people over from India. They'll be the money. They'll bring the guy as the operator. And then that's how they'll learn. And that guy will eventually, and it's 50-50. And then the second hotel, they'll either be the operator, but eventually they become the money. And it's just like, that's why they own all of the hotels here in town. It's just really, really cool. Man, this is really helpful. Is there any, just for the sake of time, is there any like takeaways that you want to leave with the listeners, regardless of where they're at, what phase they're in? I mean, you said a lot of really great stuff already. I mean, everything from making a lot of money, focusing, what you would do. But is there any like important things in your book or just anything that you want to leave everybody with today?
Well, look, you can get my book. I mentioned nextlevelincome.com. Click on the book link. You can download it. I'll send you a copy if you put your address in. You can go through all the stuff that we've talked about in there. But here's the thing. I think, and Grant Cardone was in an interview. You mentioned Grant Cardone earlier, so let me quote him again. He was talking about depression and how he thinks a lot of depression, and he was depressed. I've been depressed.
Yep.
It comes from like this unfulfilled potential. So if you're like, man, I know I can do more,
that's right,
but I'm anxious. There's something that beats anxiety, and that's action. So you need to go take action. And what that means is you need to find somebody that can help you, that can either hold you, by the hand and help you do it, or they can support you as you go into that. But you need to take action. Find somebody that can help you take that action. Find somebody that can help you be accountable for that action. Pick a strategy, go do it, but go take action.
Such good advice. I had this big psychologist on the show a few months back, and he was talking to men, and he said, he's like, 95% of men, if you're not doing what you're meant to do in your 30s, you will experience a severe midlife crisis, depression, anxiety. It's like it happens in 95% of, if you're not doing what you know you're meant to do, or you're not doing as much as you're meant to do. It's like all men go through it. And he's like, you need to figure it out before you get there. And if you don't, you need to figure it out while you're there, because if you don't, it leads to all kinds of problems, health issues, anxiety, stress, you're absolutely right. Action literally kills anxiety. I just couldn't have said it better myself. Chris, this is awesome. I have to have you back on, because I feel like there's so many things we could have talked about. And just for the sake of the timeline of this show, I feel like we should have another episode at some point, but this was awesome. You've absolutely crushed it. I love everything that you said, man. And it's just been an absolute pleasure. I can't wait to publish this. And I know everybody's going to absolutely love it. My final question is, what is the best way to, number one, connect with you as far as your resources, your content, what's your podcast? And then what is your biggest social media platform that you recommend people go to just follow like what you're doing?
Yeah. So again, nextlevelincome.com. You can get our podcast or blog. You can subscribe to our weekly email there, as well as get a copy of the book. We also have a lot of great resources on, it says banking, but it talks about using whole life basically as your own financing strategy, which no matter what type of real estate you're doing, or if you have a family, it's an amazing strategy. You can check that out as well. I have probably my biggest community is on LinkedIn, spending 20 years in the professional world. If you're on LinkedIn, you can check me out. I think it's just linkedin.com/nextlevelincome.
Awesome.
But all our links are on the website as well. We also post on Instagram and Facebook every day, and just try to continue to put information out there to help you take that action, as we talked about, alleviate that anxiety, be more successful in your financial
Absolutely.
world.
Man, this has been great. I really appreciate your time, Chris. And man, I'm just looking forward to having you on again.
John, loved it, man. Love your podcast. Thank you so much for having me on.
Yes, sir.